What's up, everyone? It's Caddy with Money Vesting. So in this video, we are going to be talking about the upcoming week of earnings and macroeconomics data. I will also be going over the options chain for both the SPY and the QQQ for the upcoming week. And we'll talk a little bit about the technical analysis on both the S&P and the NASDAQ as well. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, and the link to our Discord and Patreon is going to be down below. Don't forget, we do have that 16% annual discount that is available for a very limited time, and that is going to go away at the end of this month. So make sure that you do take advantage of that. That's going to be the second link down in the description below. So let's just quickly talk a little bit about the earnings that are coming up. So starting with Monday, we've got Fubo TV. Berkshire Hathaway, by the way, already reported their numbers, and we also did get the shareholder letter from Warren Buffett, and the cash position from Berkshire Hathaway increased to $130 billion. So they are pretty much hoarding on to a lot of cash right now. Li Auto is also going to be reporting pre-market on Monday. And then we've got Occidental, one of Warren Buffett's recent big positions. They have bought a lot of shares of Occidental even last year and this year, and they're reporting after the bell. Zoom is reporting, one of Cathie Wood's big stocks. It's going to be Warren Buffett's and Cathie Wood's big stocks reporting on Monday after the bell. We've got Workday reporting, and then Tuesday we've got Target, we've got AutoZone, we've got Norwegian Cruise Lines, we've got Clover Health, Advanced Auto Parts, Rivian, AMC, Marathon Digital, so Mara, First Solar and Novavax, Blink Energy, Virgin Galactic, we got Exxon and Monster Energy, Agilent Technology. So a lot of really interesting companies reporting earnings. I've already done a video on Monster before, so it's pretty much been the best performing stock over the last 20 years, pushing up over 350,000%. So I'm actually going to be very interested to learn more about this company in particular and what they end up reporting. Then on Wednesday, we've got NIO before the bell. We've got Wendy's, Lowe's, and Dollar Tree. And then Kohl's also reporting. And then after the bell, we've got Salesforce, Snowflake, Plug Power, Splunk, Okta, and Celsius. Celsius is another really good performing stock, but it is going to be more of a retail type week because we do have companies like Lowe's, Dollar Tree, we've got Kohl's, we got Target, we got Costco, we got Best Buy, Macy's, Kroger. All these companies reporting will give us a little bit more insight into the trends of consumer spending. And Thursday is going to be Best Buy, Macy's, Kroger, and then Costco after the bell, C3AI, ChargePoint, Marvell, Zscaler. We got Broadcom, Nordstrom, Hewlett Packard, so HP and Dell also reporting on those days. So lots of individual stock analysis and videos coming out very soon. I will most certainly be analyzing NIO. I'll be analyzing Zoom. I'll be doing a video on Costco for sure. Best Buy we'll take a look at. We'll talk about Okta. We'll talk about Zscaler, Snowflake, Salesforce. So lots of videos coming out over the next few days as this earnings week kicks off. Now, when it comes to the macroeconomic calendar, surprisingly, we don't have unemployment coming out this first Friday of the month. Usually it is the first Friday of the month when it comes out, but this week we don't have unemployment on the calendar yet. Maybe it pops up later in the week, but right now as it stands, we don't have unemployment numbers coming out on Friday on March 3rd. But we do have durable goods orders. We got pending home sales. We got the Dallas Fed Manufacturing Survey. So it's going to give us a little bit more insight into the industrial production, manufacturing numbers, a little bit more about the GDP and how we're doing in 2023 so far. And then we got wholesale inventories. We got the Case-Shiller Home Price Index. We got the FHFA House Price Index and Chicago PMI Consumer Confidence. And then finally, we've got the PMI Manufacturing Index, ISM Manufacturing Index, construction spending. So a lot of that is going to be very much focused on the economy as a whole. Jobless claims come out every Thursday, so that's going to be due on Thursday, 8:30 a.m. Eastern. Productivity and costs, and then finally we've got a couple of Fed members talking as well, along with the ISM Services Index and the PMI Composite Final. So that's going to be your economics calendar. So not a lot of data points, but definitely something to focus on with respect to the economy as a whole. Now, when it comes to the options chain, I wanted to go over both the SPY and the QQQ and some of the levels to really be paying attention to. So when it comes to the SPY, we close in at $396.38. That's where we are as of Friday. And looking at some puts first, and we're looking at some out of the money puts because they are going to be trading at anything below 396. So puts trading below 396 are going to be out of the money. And I've highlighted some of the ones that have a very, very high open interest, and these are expiring in 5 days, right? So this expires actually on March 3rd. This is not for Monday, not for Tuesday. This is for the upcoming Friday's expiration, 5 days out. So what you'll notice is that we actually have a lot of put volume and open interest as opposed to call open interest and call volume, right? That does make me believe or make me think that investors are positioned a little bit more bearish going into next week. So take, for example, 395, 396 strike puts. We've got over 40,000, over 41,000 contracts currently open interest for Friday's expiration. If you go further down on the puts, 392 to as low as $390, we've got 38,000 and as much as 67,000 contracts currently open. They are, pretty substantial numbers for open interest. $390 for S&P 500 if you take a look from where it is right now, 396.38. So from current levels, if it drops down to 390, that's going to be a drop of 1.5%, which is actually not that much. Very reasonable to expect in 1 week from the SPY. Now, on the contrary, when it comes to the call options, $400 strike calls, which again are going to be further out of the money from where we are trading right now. We've got only 11,847 contracts in open interest right now. And then $405, which also is going to be closer to 1.5%, close to 2%. We've got over 13,800 contracts currently in open interest. So definitely a little bit more of a bearish bias going into this upcoming week, especially from the options chain. There's more put options expiring on Friday with respect to puts as there are for calls. And QQQs, we don't have a lot of volume on the Qs, which is a little bit surprising in itself. But when it comes to $290 puts on the Qs, we do have over 28,000 contracts currently in open interest, and everything else is just kind of like in the mid 7,000 ranges. Nothing really to write home about. And when it comes to the call options, 295, we've got 13,400, and then 300, we've got 13,600. So all in all, if you combine those two big numbers, we've got 26,000 open interest in contracts in open interest on the call side, and then 28,000 on the put side. So I would say the QQQs are a little bit more neutral, but SPY is a little bit more bearish. And I think that goes to show because of the earnings that are lined up, right? So we are looking for less tech companies and more retail companies scheduled for this upcoming week. So I think that just goes to show that investors are not expecting great numbers out of companies like Best Buy and Costco and Wendy's and Target and companies like Salesforce, even though that's also a Dow component. I think that just goes to show that investors are positioning a little bit of a hedge going into this upcoming week with the put options that they already have in place. Now, talking a little bit about the S&P 500. So SPX closing in at just over 3970. We're at a very, very critical area of support, not only because we're trading at the higher low, so not only because of this ascending support, but also very, very important support is going to be that 200 simple moving average. So for example, if I remove everything on the chart, we are trading right above that 200 daily simple moving average. That's going to be sitting roughly at 3,940 levels, and that is incredibly important for the S&P to validate. If you break down below this level, then there is a possibility the bears start to once again come into focus. And there's a possibility that we break down even further, start trading lows of about under 3,800 points. But so if you do break down below 200 SMA, next support really is going to be down to 3,785, closer to under 3,800 points. So that right there is going to be the level to watch going into next week for the S&P 500. And of course, not to mention the higher low and this lower high intersection that we have for the SPX. So right now we're coming down with a pretty decent pullback. S&P is down about 5.5%, close to 6% from its recent peak. So we're coming down to that higher low. So it's going to be interesting to see whether we see the markets get bought up or continue to see it drift lower. Talking about the NASDAQ, and NASDAQ's already started to break down below the 200 SMA, below the support over here. So this next lower high is going to be that next support level, sitting roughly around 11,200. So old resistance level potentially acting as a new support for the NASDAQ moving forward. So that's going to be the level to watch going into next week. But of course, if we continue to see a little bit of sideways trading based on the options data as well, it is possible that we see a little bit more consolidation But of course, if the S&P starts to break down below the 200 SMA, then there is possibility that we see some more continued downward pressure on the markets for us to drift a little bit lower. So it is going to be still that time for us to remain cautious. I'm still, hedging my upside here and my downside with covered calls, and we'll start selling cash secured puts. Some of the stocks that I'm really watching: Google, PayPal. I will be looking at cash secured puts on those companies going into next week. And then Applied Materials, a company that we analyzed, literally yesterday, a fantastic company, excellent financials. So those are some stocks that I will definitely be looking at from a cash secured standpoint, and then selling those, collecting premiums, and being able to purchase them at a very reasonable to low fair values. So I hope you guys enjoyed this video and found it helpful, a complete update. So we do have a lot of earnings coming up, along with some macroeconomic data and some of the levels that I already pointed out. So S&P 500, we've got a big level to watch at the 200 SMA, sitting roughly at 3940. If you break down, then the next level is going to be 3800, a little bit under 3800, and the Nasdaq's got 11,200 for us to watch right now, with a resistance sitting at 11,500. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. It's always happy investing, and I'll see you all in the next video.